Welcome to an Ask Me Anything episode on the ACT podcast. My name's Sam Parent. I'm your host, and we're talking real estate today. And I'm going to share, maybe the first thing that I'll share is a story or a question that I had about Aboriginal title. So, one of my shareholders sent me this article concerned the ability to refinance a property. So I'll read that email. I'll just stop that for a moment and bring it up again here. And is that the one? Could be. So yeah, the core issue is that there's been some success by various Indigenous groups in the courts recently, looking for a declaration that their Aboriginal title has been infringed upon, years ago when the Crown took it and then started issuing simple title, fee simple title to individuals and municipalities. And the argument has been gaining some traction, and everybody's been wanting to know, what does this mean? Am I in danger of losing my house? What do these court decisions mean? Am I going to be able to get financing? There's lots of there we go. There's lots of worry that this kind of a story can bring about. And I have a friend who's going through law school and just wrote a memo on this topic, and it's really interesting. So I'll share the email that I got. There we go. And then we can talk about it. So, the comment was, "Oh, this will probably impact a lot of the developments. It'll probably affect the Vernon property. I hope we don't have to refinance soon, as the banks will be reluctant to give out money when title is in doubt." So I replied, "Hi, I hope you're doing well and retirement's treating you kindly. No, there's no refinance in Vernon for another 3 years. I have a friend in law school who just did a paper on this, and I'll read out some excerpts of that in a bit, but I attached it to the email back. The consensus that I've heard in law circles is that this issue will go to the Supreme Court, and it'll probably take 20 years or longer to get fleshed out. Aboriginal groups have said that they're not interested in taking people's fee simple title, and will likely just seek to prove that there was a Crown infringement, which is always permitted for good economic reasons. And we've already developed land that infringement has already happened. So there's nothing that can be done to change that. But if Aboriginal title is found to be valid, then an infringement can be found, and they can seek more money from the Crown as compensation. So Indigenous groups have won some Aboriginal title cases, the Haida, the Cowichan, and they were granted Crown land, I think in the case of the Haida, but not to any private fee simple lands. So in summary, I agree, the bedrock of civilization is private property rights. So these news articles can be alarming, and that's the point, because they're trying to grab eyeballs. But this area of law is still in its infancy, and in my opinion, we're not going to be dealing with the fallout of this in our lifetimes. And I don't think our property rights are in danger at this point. So I included at the bottom of the email the legal the legal ruling in Supreme Court that talks about to make a claim for Aboriginal title, there needs to be three conditions met. And the first is that the land The Aboriginal group asserting title must establish that the land was occupied prior to sovereignty, and proof of that can derive from common law, physical possession of the land, and Aboriginal perspective on land use. 2, there needs to be continuity between the present and pre-sovereign occupation, and that chain doesn't need to be unbroken. And at sovereignty, the occupation was exclusive. So it's interesting in the article, it talks about how there's 2 separate Aboriginal groups looking to establish Aboriginal title. 2 First Nations. So that in and of itself would appear to contradict the ability to find that there was an infringement of Aboriginal title, because we have 2, not 1 group that was occupying it. Because the 3rd condition in this Supreme Court of Canada decision by Delgov, it was Delga-McCoo versus BC, I think. Just pull it up here, show you guys. Let's just put it up. There we go. Yeah, Delgamuukw versus British Columbia. So those are the 3 conditions. So to me, the fact that there's 2 Aboriginal groups going after the same territory doesn't satisfy. They're basically fighting each other to say who had exclusive use of the title before. Anyway, there's lots of arguments that I'm sure that the province and the Crown are going to put forth to avoid having to pay extra money. But there's really interesting history that can be looked at, because we look at the facts and the background regarding the justification of any Crown infringements on Aboriginal title. And it goes back to the 1700s. There was a even earlier than that. I see something here in 1493. There was a papal bull called Inter Cateria, and it authorized Christian Europeans to claim sovereignty over lands that were not governed by Christian rulers. And then it was all built upon by there. There was a royal proclamation in 1963 that established a legal framework that recognized Indigenous land rights. And in 1871, the Crown started entering into numbered treaties, and the history just goes on and on from there. So is this going to get fleshed out and be impactful to us, during the term that we're going to be owning real estate here the next 10, 20, 30 years? It may not at all. Like this is going to be disputed back and forth in the courts for a very long time. So I think it's as deep as I need to get into it right now. But if you're interested in reading more about this and the history, I'd be happy to share a copy of this memo with the author's permission, of course. So you can send me a message on Instagram or ask in the comments section. We can flesh this out a little more. But it's really probably the amount of detail is probably more appropriate for an actual course at the university. But as far as I'm concerned, for laymen or for real estate investors who are looking 5-10 years into the future, this is not a major concern for us. So the next question I want to address, I'll just pull up my notes here. So the next question I want to address is I got a call this week from a friend of mine who's in Ontario, and he is working on a refinance of a sixplex he bought, and he bought pretty well, and he figures that the rents on it should support a valuation of around $650,000. But he's working with a bank, I think he said RBC, and they're not considering the income of this property. They're treating it as a residential mortgage or rental. It is a rental. They're treating it as residential financing. They're not treating it like a commercial loan. So even though he's been able to increase the income a lot on this sixplex, they're not giving him the valuation he wants. So his concern was that if he's only got a $520,000 appraisal that is being supported, and not the $650,000 that the income would support using the cap rate calculator, that he's not going to be able to refinance and get enough money out to go and do his next project. So he had a question because he anticipates some more renovations coming, and he wants to purchase another property because he figures that this market he's investing in is in a bit of a boom, or just at the beginning of a boom. So he'd like to get another property and carry on with his success. So he wanted to use the refinance proceeds to pay off his home equity line of credit, because he put a HELOC onto his home and used that for the down payment and the renovations on the sixplex, in the expectation that he would get a refinance once the rents were up, and then be able to pull the money out and use it again. So he's in no big rush. He's got 4 years until the term of the mortgage that he initially got on this sixplex is up, but it's a variable rate mortgage, and I think he's cash flowing about $3,000 a month, because the mortgage is fairly low. He bought in the 300s this sixplex, so he's seen a good lift in value. And yeah, the HELOC, the home equity line of credit, you're only paying interest. There's no requirement to pay any principal on it, so the payments are a lot lower. The interest rate's higher. It's at 5.54%, he said, and he's being offered this about $100,000 lower appraisal on his property, and that interest rate's lower. It's 4.04%. So his question was, should I take the lower interest rate at the lower value, and I gotta leave some financing. I gotta leave it takes up some of my HELOC room, which takes away some of my safety buffer, and it puts some risk on my personal home when I want the business risk to be by itself on the sixplex. And we talked about it for a time, and basically he's going to reach out to a couple of contacts that I had. There's a mortgage broker who specializes in helping people optimize their mortgages here in Canada, because some lenders, you want to use them first. Say, for example, their rules change all the time, but like CIBC used to be that they'll give you 3 mortgages on houses in the residential space, and that's it. So, and they don't care if you've got any mortgages anywhere else. Like if you got 2 other mortgages, they'll only give you 1. Whereas a lender for a long time, like TD, they didn't care about any other mortgages you had anywhere else, and they would give you up to 6 mortgages with TD. So in that case, the way that those lenders work, you would want to use up your CIBC mortgages first, get 3 houses or whatever in the residential space with CIBC, and then maybe move on to RBC and get 3 or 4 mortgages with that, and then move on to TD Bank. That would be the last lender that you want to do. And the only way really to know which lender to use in which order is to work with a broker that does a lot of these deals and helps investors plan out their portfolios on which mortgages to use first. So I referred him to that mortgage broker. I said, for now, make an application. His principal residence mortgage is coming up for renewal, and he didn't know if he should ask to increase his HELOC or not. And I said, yes, absolutely, because the more of that money that you have available, the faster you can jump on deals. You can buy something and then use the HELOC, and then once the dust is settled, then you can apply for longer term financing, or maybe once you've increased the rents, like he's been successfully able to do on this sixplex. So that was the action step that our phone call resulted in. Is he's going to go to look to increase his HELOC, and then he's going to apply for other long-term debt, maybe some commercial debt on his sixplex, instead of going the residential route. Because if you use commercial financing in Canada, then it's the property that qualifies for the debt. You don't have to personally guarantee it. They don't use your income qualifications to do the debt service calculation. And there's some really good programs with some of the commercial loans where the MLI Select is one of them, for instance. So if you commit to make a certain amount of your units accessible, or you commit to make a certain amount of your units affordable for, say, the next 10 years, you can get really favorable amortizations, 30, 35, 40-year amortizations. It really reduces your payment. You can get lower interest rates. And there's a lot to explore within the CMHC landscape. That's the Canada Mortgage Housing Corporation. And really the key is to talk to somebody who knows what they're talking about in this space. So I told him to maybe go enroll in a course by a friend of mine who used to be a CMHC underwriter, and who's now teaching people how to apply and successfully obtain CMHC insured mortgages for their commercial property. So that, I pointed him in the right direction. We talked a little bit about the Smith maneuver, how if you do have a HELOC, you don't want to be taking the money and using it to spend on personal items, and then using some of that HELOC to spend on investments. Because if you're mixing your personal, any borrowed funds, if you're mixing personal use with investments, then you're not going to be able to use the interest as an expense, because there's no clear delineation between your interest that you're paying for personal use of the, if you're buying a boat or something, or a personal vehicle, and for your investments. So, but he said that he doesn't mix his personal investment interest costs with the HELOC at all. So that simplifies things for him a lot. So that's it for this week's questions. If you have a question, you can send it to me, sam.j.perrin on Instagram, or you can reach out to me here on YouTube. That's it for now. I hope you have a great rest of your day. Peace.